All right, so welcome to the mastery class. So if you are taking this class, it's either you have already been trading or you've taken the beginner class and you've made a progress to this level. So the beginner class is free. So if you're watching this and you want access to the beginner class, you can let me know and I'll give you access to the beginner class. But this could change in the future. Right, so the first thing that we are going to talk about is top-down analysis. So what is top-down analysis? So top-down analysis is a term where like you start your analysis from a higher time frame to a lower time frame. So you can start from, let's say, the daily time frame and then work your way to maybe the 1 hour. So that's a top-down analysis. But I'm calling this a top-down analysis, but we are not really going to go through the daily to the 1 hour. It's more or less about multi-time frame analysis. Multi-time frame analysis. So we are still doing top-down analysis. It can be top-down daily, either from the daily to the 1 hour or from the 1 hour to the daily. It's all classified as top-down analysis, right? So what we are doing is a multi-time frame analysis. So we are going to look at multiple time frames to analyze. So one of the main important time frames that you need. So in general, like you need to be using the bigger time frame. The bigger time frame. So if you're already trading, this might sound very different to you. Like you are told that if you are trading on the smaller time frame, you can catch good entry, right? But there is a lot of confusion on the smaller time frame. So I know people are trading on the 1 minute, 5 minutes, right? It is good, but you could work your way to this point here, but this is something that you only consider when you advance, and like you want to try new things and you start experimenting with this. But now, even if you've already been trading on a smaller time frame and it's very difficult for you to translate into a bigger time frame, the least time frame you should be looking at is the 15 minutes. But between the 15 minutes and the 30 minutes, I think I prefer the 30 minutes time frame. But if you are trading on any of these two, it is fine. So we are going to talk about structural time frame. Structural time frame. Structural time frame. So you should be looking at your structure on the weekly, the daily, and then the 4 hour. Okay, so you should be looking at the daily, the weekly, and the 4 hour, at least 3 big time frames. So it doesn't necessarily mean you should be looking at a weekly, daily, 4 hour, right? You could look at the weekly, the H12, and then the H8, right? But if you are not using the paid version of TradingView, you don't have access to the H8 and then the H12 and the H8. So this is the most common one everyone can use: weekly, daily, and 4 hour time frame. So let's go to the GJ. So this is GJ, GBP JPY time frame, GBP JPY charts, right? So let's start from the weekly time frame. So you want to understand the structure from the weekly perspective. So here, for example, on GJ, in terms of structure, we need to understand that GJ created a high here, right? And this was a major low here. So here on the weekly time frame, our interest is in the bodies. We want to see where we have where weekly, so where the weekly levels were close. So we need a weekly high and a weekly low. So here price came to test this weekly high and pull back. And now there is a resistance that is created here currently. So we have a touch, and touch. So we have this touch here, another touch here, another touch here, which is very important. Another level to consider here is this level here, which is another key level on the weekly time frame. So on the weekly time frame, what I mostly say is you are not really looking for a lot. So here, the reason why I'm marking here is because this zone here, price tested here. So I'm done. This is what I'm looking for on the weekly. I'm looking to draw major levels that price has tested in the past on the weekly time frame. And that's what we are looking for on the weekly time frame. And then we go to the daily time frame. On the daily time frame, this is where you could apply trend lines, right? Which we would look at trend lines later if trend lines is something that is new to you. So on the daily time frame, I'm looking for 2 points, the two closest points to draw my trend line. So here, for instance, I'll take this low here. And with the trend lines, I'm using the wicks. Two closest points here. And I draw my line from here to here. So that's a trend line, break of trend line below here. Here, I don't see any trend line here. But what I can see, I can draw a trend line here, but if I'm drawing a trend line, this way to be connecting this wick to that level like that. If there are certain important key levels, this is where I'll draw them on the daily time frame. I'll draw those key levels on the daily time frame. But from what we can see here, the levels that we drew on the weekly time frame is almost like the same thing. So like here, you would have drawn like a resistance here. That's the same level we have here on the daily time frame. Here too, the same thing, right? So these levels from the weekly time frame is okay. And then you go to the 4-hour time frame to see if you find any further break of structure, breakdown of structure. So here, when we come to the 4-hour time frame, we see some major moves in the market here. So here we can see price has broken this low here. So this is where we actually start looking at the in-depth structure. So here on the 4-hour time frame, we see price started from here. We broke here, and then we are here. We failed to break this level here, but we've broken this level here, which means short term, we are more or less like in a downtrend. But price might go back and test this level. And if we don't break, we look to go down. So this is like how I would go about understanding what the structure is saying. So go from the weekly time frame, go to the daily time frame, and then go to the hourly time frame. So unfortunately, the market is closed as at the time I'm recording. So you see, this is closed. We would have tried and see if we can find some opportunities. So what you need to do is to use these time frames, the 1 week, the 1D, and then the H4, to understand what the structure is doing. Sometimes you have some very interesting structure. So here, for instance, you have like an ugly head and shoulders pattern here. I don't know. It's not everyone that might be familiar with the head and shoulders pattern, which maybe I might talk about it, or I might add to the beginner class, which I am still recording. So you might be able to have a look at it before you get onto this course. Yeah. So in terms of taking your trades, right, you can take your trades on the 4-hour time frame. But if you want to use a lower time frame to enter your trade, the recommended time frame for your trades is M30 and the H1, the 1 hour, and then the M30 time frame. So when we go back in the course of the class, we are going to talk about different ways you can enter trades, and you would learn how to use the M30 and the 1 hour to enter trades based on the strategy that we are trading, right? So now what we've looked at is what? Multi-time frame analysis. So you go from the 1 week, the 1D, to the H4 to understand what the structure is doing, and then take your trade from M30 and H1 depending on the structure but you could also take your trade on the 4-hour time frame, right? So see you in the next lecture.